A massive sell-off in chip stocks, sending the Nasdaq down 3% at the moment. All three major market gauges pulling back, but the Nasdaq especially hard hit today. But the U.S. economy defying expectations yet again. New numbers out today showing America added 172,000 jobs in May. That was double the estimates. This is the first jobs report with Kevin Warsh in charge at the Federal Reserve. And the newfound strength in the labor market now has some pricing in a rate increase by the end of the year. But the White House says not so fast, arguing President Trump's policies will have the opposite impact.
We've got a big investment boom. We've got a productivity boom. We've got no tax on tips, no tax on overtime, which means we got a labor supply boom. So supply is skyrocketing. And when that happens, you could have growth with low inflation. But of course, what we expect the Fed to do is to watch the inflation numbers. And as the inflation numbers go in the direction that we believe they will, then they'll have plenty of room to cut rates.
Take it wherever you want it.
Go, Lou.
Buy some more chips on this dip. I mean, this is the oxygen of the digital economy. You're not going to get opportunities to buy more. This is a knee-jerk overreaction to a Fed hike being more likely now. We see this straight. I mean, look at it. The tell here for me.
Hold on.
Hold on.
SanDisk is up 600% year to date, and you want to buy on an 8% decline.
NVIDIA is trading at a market multiple. Trading at a market multiple and growing earnings by 50+%. Earnings
yeah,
are.
but it couldn't do it when the stock competition was
See
on.
what you did, Dagan? You set me up, threw me into the lion's den,
Yeah,
said go
that's
wherever
right.
I want to go.
It was a trap. I tell you.
Hold on.
We had a discussion yesterday about what
Here's what I'd
happens
say.
when we agree to, when we're all agreeing.
Yeah.
So
Yeah,
pile
Here we
on
go.
it.
Pile on.
I have a serious question.
Okay.
2000, NASDAQ drops 80%. How do we know this time, and I'm a believer as you are, this time is different, AI is different, these are fundamentally companies that have real earnings, real profits, free cash flow. But how do I make sure that the market doesn't think that we're going to decline 80% again, so that I buy Micron on an 8% decline when it's up 300%, and then I don't get slammed on another 80%
So
decline
an
next
80%
year?
decline has to have some external event that causes that, right? Some collapse. We talked about it last week on the bottom line. It was the Fed raising rates that was not conducive to that boom continuing. But you put your finger on it too. It's the earnings story. At the end of the day, Occam's razor rules in the market. If earnings aren't growing, then the stocks can't keep going up. If earnings start reversing course, then you're going to see the stock market correct. But we're not seeing that. Or in fact, we're seeing analysts
Earnings
are getting
accelerate.
spoiled. They're going like, well, you didn't raise expectations yet again.
Yes,
Yeah.
for now. But
Right.
the Wall Street Journal article that Brian loves, I think from this week, was it this week or last week?
This.
Oh, right, okay. It talks about what's going to happen when all this stuff is commoditized and the prices come down and earnings aren't going to be as robust. Nobody's going to be able to call what the top is and when that
Correct.
is going to happen. So how do you not get stuck holding the bag?
So I would look at memory stocks and storage stocks as the tell, because there is a 2-year delay in terms of supply. When that bottleneck is solved, then I think we can start talking about commoditization, margin compression, but we're not seeing that anywhere right now. You're actually seeing all the chips that we can make getting soaked up into the market, all the compute power we can put online getting soaked up and used more. There's no software apocalypse. We're hiring more software engineers. So I think, again, if we zoom out, right, a one-day dip, the tendency is always like, freak out, it's an 80% correction coming. That hasn't happened once yet, right? We've seen, if we zoom out, these dips happen momentarily.
Should it be happening though? Does it need to? We need to be off more than 10% on Micron and AMD, right? Like, what do we need? Something so that we don't just keep saying AI bubble. Do we need something that this feels
Listen,
like a level-headed reset?
I mean, yes, consolidations are healthy, so a 10% pullback. But I would say this. The only thing there's a bubble in is bubble talk. The fact that everyone's calling a bubble tells you we're not in a bubble yet, because everyone's trying to earn the trophy. I don't know what trophy it is for saying, I called the exact top. I mean, Ray Dalio came out and said, this is eventually going to burst. Thanks, Captain Obvious. Like, when is eventually, and how do I adjust my portfolio to eventually? You don't. I think you use, for me, practical investment advice. If you have big winners, use trailing stops. This is a technique you can enter on any trading platform. Set it at 20 to 25%. So as prices go up, you're moving up your exit price. It's an automatic sell thing. You'll sell if they come down. So you're never going to suffer an 80% decline.
Get in.
Well,
I have a question.
I have another question.
Lou, you just got ambushed here. And I apologize. I should have known that was coming and helped you out, but you really did a good job.
Whose team are you on,
That
Brian?
is so not an ambush.
Yeah.
That was an ambush. No, that was
You'll know an ambush when you see it, okay? Trust me.
I don't want to be on Dagan's bad side.
No,
Let's not go there.
no.
When I ambush, your eyes will water.
Yeah.
No, that was good. You handled that deftly. I remember some of the people who were just ambushing you about that telling us earlier this week that the economy was growing. They were throwing out PMI.
Preach, brother, preach.
ISMs. I heard about all this. Even there might have even been like a consumer sentiment in there. I don't know. I don't care about that.
Was there a report from Morgan Stanley?
There was probably more. There was probably all the names that you're familiar with. They were saying all that earlier in the week, and then you come on and
I
say,
still
"Look,
agree
the
with that,
Nasdaq's down
Brian."
3%." Okay, so Lou's saying Nasdaq's down 3%. Let's buy a little bit of the dip. And the strong economy people are now like, "No, wait a second. Is it going to fall 80%?"
I still agree with that, but what I'm concerned about too is if I want to get in on OpenAI, Anthropic, and SpaceX, I have to sell something.
Don't. Why do you
Well,
want to get in on them?
No, sorry. I'm talking about I'm not speaking about me personally.
Yeah, that's another good point.
I'm
Lou.
thinking about a big institutional investor.
Yes,
If
fair.
SpaceX is now in the Nasdaq and not the S&P 500, but they're in the Nasdaq, and I hold the Nasdaq, I'm now going to be required to buy it because it's in the index. And if I'm an index tracker, I have to buy it, which means I need to raise capital from somewhere else. I sell what I can. I sell the good stuff. So I think I'm trying to also figure out how much of this is selling what I can to raise cash, because I will be required to buy these if they are in the index. I'm an index tracker.
Totally fair point, but it's transitory because that happens all throughout investment banking. You got to sell a winner to fund the new ones. That's just a short-term window. What happens after the selling's done and the IPOs are launched and the money's raised?
Okay.
Now, there's always a buyer on the other side of it,
Yeah.
on the other side of every sale.
Oh, you
right?
and you get paid every couple of weeks. You got new capital to put to work.
I wasn't talking about me. You know what I mean. I'm
You
talking
said
about
you wanted a piece of
like
SpaceX the other day.
Oh, the ambush has turned all of a sudden. Watch out.
Hey, what's Chipotle and Papa John's doing
now,
today?
why-
Like, are we putting money to work or what?
Lou, I was the only guy defending you for a
That
minute
was
there.
low.
And then you went, fine, I'm done. I'm
Would you
independent
like
now.
to impart your knowledge on us and the people at home? Or may I
On
ask
what?
Lou a question?
No,
Just
you
the
go.
topic. So you're talking about just an unrelenting demand
Yes.
for chips, every element of AI. I'm in on that, but there are supply constraints.
Correct.
That are already emerging. There are, potentially will be investment, maybe some investment constraints. Right now, in terms of the spend, the money is there. And we talked about the, it's an $80 billion equity raise from Google.
From Google. Yeah.
record in corporate history.
I know.
Pulling in Buffett.
Wild.
Unbelievable.
Yeah.
On top of an $85 billion debt raise last year. But let's factor in and Jason Trennert brought it up several weeks ago, the rising populism on the right and the left and the middle, the opposition to data center construction. We talked about Monterey Park, California, voted for a permanent ban on data centers. New York Democrats, 1-year moratorium. Elizabeth
Did you
Warren.
see Kevin O'Leary had to scale back his in Utah?
Right. There was outrage there. We can go through all of the data centers that have been paused this year. Bernie Sanders wants to confiscate half ownership for the government.
He's not the only one, by the way.
And Florida
Go, Bernie.
AG is suing OpenAI and Sam Altman. So there's that rising populism. But then in terms of the supply constraints, Taiwan Semiconductor said this week is struggling to meet demand from American customers, even with its factory build out in the United States. Yeah. How does that, so you have the soaring demand, supply constraints, how does that play out in the stocks?
So I think it plays out in two ways. The populism is not surprising to me because every disruptive technology faces a force that moves against disruption. In this case with AI, it's the politics of it. We saw it with 5G coverage, right? No one wanted a cell tower in their backyard, but we got them everywhere now because everyone's addicted to their phones. So I think you're going to see scaled back plans. It's just going to be a response. You're going to have to, it's a give and take. You're going to have to give back some of the runaway growth you wanted. But then on the supply side, what does that do? If we can't meet the demand completely, it's going to push prices up, right? So you're still going to have this runaway growth of data centers. I mean, the last stat I saw was we have about 4,500 data centers in the US. There's plans to build another 3,000. Drop that down to 2,000. You still have a supply shortage on chips. If TSMC, which now 61% of their chips last quarter were for AI, can't meet that demand, they're going to keep raising prices. So that's going to bode well for the companies, for TSMC. But then you also got to think about the physical chips, these analog chips that act as sensors in the real world. I think that's the real chip trade right now because everyone's pouring their resources to AI chips. They're forgetting about the chips that we need in every other device that uses it in our automobiles. So companies like NXPI Semiconductors, ON Semiconductor, the makers of physical chips, are doing really well. So I think the market's going to have to find balance. That's what it's trying to do today. It's trying to balance out what do we do if there's an interest rate hike regime that's coming, that's inevitable. How we adjust the models for that higher interest rate? But it's not changing the demand, right? If you're just changing the cost of capital, not the demand for the product.
Yeah, that's a good point.
And because these the applications, I mentioned this yesterday, are not latency sensitive, these infrastructure, these server farms, they can be anywhere. So this is our game to lose if the politicians are morons, the likes of Elizabeth Warren.